Markets are sending conflicting signals, and the divergence tells an important story. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for May 16th. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.16, losing 0.73% on the session. The world's most traded currency pair is tracking ECB versus Fed rate expectations. Pound sterling to US dollar is trading at 1.33, losing 1.5% on the session. Sterling is sensitive to UK economic data and Bank of England commentary. US dollar to Japanese yen is trading at 158.73, gaining 0.56% on the session. The yen remains in focus as Bank of Japan policy normalization continues. USD SGD is trading at 0.7834, gaining 0% on the session. The Singapore dollar reflects broader Asian FX sentiment and trade flows. Australian dollar to US dollar is trading at 0.7153, losing 1.4% on the session. The Aussie dollar tracks commodity prices and Chinese growth signals. Now let us look at the macro forces behind today's currency moves. On the geopolitical front, the move follows reports that stock markets rally as if the Iran war is already over. Really? Taste de live. This is adding a risk premium across energy markets and supporting safe haven flows. Equity markets are responding to reports that S&P 500, NASDAQ end lower as inflation, Iran tensions weigh, the Detroit News. Rate expectations remain the dominant macro driver for equities and currencies. Any surprise, hawkish or dovish, has the potential to trigger outsized moves. Investor sentiment is being shaped by S&P 500 and NASDAQ notch records, boosted by RE and earnings optimism. The move in the dollar reflects reports that European stocks fall as Iran war drives oil rally, bond sell-off. Our near-term view on pound sterling to US dollar. Pound sterling to US dollar is consolidating a pattern that often precedes a directional break. Watch the $1.36 resistance and $1.31 support as key levels for the next leg. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Before we wrap up, here is your watch list for the week ahead. Keep a close eye on central bank speakers and key data releases. Any of these could be the catalyst that defines the next directional move. If you found this analysis useful, please hit the like button. It genuinely helps us reach more investors. Subscribe and turn on notifications for our daily market briefings. Drop your view in the comments. Are you bullish or bearish from here? We read every comment and often feature viewer questions in future videos. That is all from MTRS_Market Pulse for today. All analysis is for informational and educational purposes only and does not constitute financial advice. Always consult a qualified financial advisor for your specific situation. Trade safe, and we will see you in the next one. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.